Hey guys, this is Evan Einhorn with Modern Home Lending. Just wanted to welcome you to Broker Playbook. Today we're going to be talking about how to become a true mortgage advisor. We're all loan officers, but your true advisors that's actually going above and beyond for the client. Um, we'll talk about why it's important to me and our team, and also how it's contributed to our success. Um, I feel deeply about reviewing options and being a true advisor, and not just a loan officer or order taker. And that's how we set us apart. So, looking forward to having you guys today, and we'll dive right into it. Um, just a few of the top key reasons that we think it's important, to be the advisor and not just the loan officer, is to set yourself apart. So, I always used to joke around. I came from retail, and one of the reasons they preached be an advisor, review options, etc., is because you would always get rate shopped. Well, there is some benefit to that of making sure that, hey, if you are a true advisor and you're laying out all your different options, it does become less about, hey, what's your rate today? What are your fees? Because you truly are reviewing all the different options. So when I'm talking about advising clients, um, I'm talking about not just giving one interest rate. I'm talking about not just giving one set of fees. You know, on a purchase, we always give five different rate options. On a refinance, we typically give five different rate options. And then we dive deep into, hey, what makes sense for you? What are your short and long term goals? So, just like a true financial advisor reviews options, we see it as our opportunity to be an advisor to a client. So, you know, financial advisors of the world, they still are here. A lot of people thought, oh, they'd be gone away, etc. The Robin Hoods, the online fidelities of the world, they'd be gone. But they're still here because they do play an important role in a lot of people's um, financial advising, etc. So I think we play an important role of making sure that we help the client choose the best mortgage for them and they understand all options. They can go to Rocket and download an app and choose a mortgage, but do they really understand it? That's where we come in as a true advisor. So it's important for a few things. One, making sure they understand everything in education. Two, building trust. And three, really like the mission of what I do and also what our team does. So anyone with a team, having a strong mission is huge. And everyone on our team knows that, hey, our goal is to provide the best value to the client and make sure they're in the best loan for them. And that goes a long way because there's some clients we literally change their lives. And when you think about that on a day-to-day basis, there's a lot of stuff that we have to work through, and that definitely helps you out. So I wanted to dive in deep into what are we specifically doing to provide that support for our clients. So, like everything, having a process is very important for a business. So, up front, what we do for every single client is the exact same depending on what category they fall into. So, if someone is qualified, we'll let them know, hey, you're qualified to X amount in a monthly payment. That's about this in a price. And here's your different loan options. So, on conventional, you might be qualified up to 400,000. Because your credit might not be that great, you're qualified to 368,000 on FHA. So we lay that out. And then we also lay out, hey, what do your different payments look like in different price points? I'm shocked at how many people don't provide payment estimates to clients upfront and help them review, hey, what does 300,000 look like versus 350,000? So this is something we do on every pre-qualification. What's your max qualification? What are your payment estimates in your target price point? What are your payment estimates between different programs? And then also, what are your payment estimates between 3 and 5% down? So we use some internal Excel spreadsheets to do this. I know a lot of people use Arrive that you can literally compare multiple loan options. It takes an extra few minutes up front, but totally worth it down the road because one, it makes you an advisor, sets you apart from the other loan officers out there that are just quoting rates. And two, it also creates some consistency. So with the permission of the clients, we actually copy the realtors and real estate partners on this. So they know exactly what they're going to get every single time. So they know, again, not only are we saying, hey, you're qualified for 300,000. For a client, that doesn't mean much. Like they might be qualified for 300,000, but not want to go over 250,000 because they're payment estimates. So when one of our real estate partners is out shopping, they can reference that email and say, okay, a ballpark payment estimate for 250 versus 300, this is what you're looking at. Or, hey, you found this home at 350,000. It's at the top of your price point, 3% down versus 5% down. You know, maybe you can get a gift from family to get to the 5% down so you feel comfortable with that payment. So it plays many roles of taking the time upfront to review the options. And we almost call it like a loan Bible that everyone sees. So, you know, we send it out, the real estate partner gets a copy of it. Internally, I reference it all the time because it's hard to remember, hey, if you qualified them for FHA and conventional, how much did they qualify for max if you're going to have to go through all your AUS findings to find out exactly what you're qualified for? So for us, I can reference back Joe Schmo was qualified for a $1,500 monthly payment or $2,500 monthly payment. And then I can target in exactly what, you know, where we go there. On refinances, we always review multiple options. We review options with fees, with no fees, and then also with a lender credit where we're covering all the third-party costs. That's important because a lot of people call and say, hey, what's your no-cost loan? Most consumers don't even know what that is. When they say no-cost loan, I don't know if they're talking about no lender fees or no title fees or no third-party escrow fees, etc. Here, we specifically compare them and we talk about short and long-term goals. If most of my clients don't know where they're going to be in 5-7 years, it might not make sense, you know, to pay points. I remember seeing online like the average person was paying 0.7 points a few months ago. Our average client is probably paying 0, pretty close to 0, because some of our clients are taking lender credits. And most of our clients are paying no fees just because they don't know where they're going to be 7, 8, 9 years from now. And they've decided, hey, they don't want to be a landlord, or maybe they do want to be a landlord and keep this property forever. So that's what we do: purchases, refinances. Now, what happens to clients that don't qualify? Like, we have a specific process for that. And we're not just going to say, hey, no, you don't qualify. Again, here, even for the clients that don't qualify, we want to be a true mortgage advisor. So what we do is we take their income and their debt, and we look at their credit score. We will run credit simulations. We have a bunch of disclosure verbiage on it that it's not guaranteed, etc. But hey, here's some tips to get your credit score up. You know, results are deemed reliable, but not guaranteed. If you open a secured card and pay down this card, you're likely to get to this score. And once you do, here's your estimated qualification. It'll be somewhere in this range of 350 to 400,000. That's important because there's no reason to tell a client, hey, work on your credit, and then they come back to you and they're only qualified for 200,000 and they were looking at homes above that. So we have a process for each step of we have a process for each step of the process, I guess you could say. Hey, if you're qualified, great, here's what clients get. If we're looking at refinance options, here's what clients get. If you're looking to buy and you're not qualified yet, you know, we have a separate process there. If they're more than 6 months out on credit, you know, that's where we always offer, hey, would you like us to refer you to my credit guy? You know, and that's templated in our emails. So every client gets treated the same. And again, just kind of reverting back why it's important. Every client gets treated the same. You become the advisor. Real estate partners can trust you. So it builds trust with clients, real estate partners. We have financial advisors that refer us. They know exactly what they're going to get from us every single time. It's consistency, trust. And from a fair lending standpoint too, not as small brokers that we run into it, a bunch, but we treat everyone the same, which is kind of the golden rule. Treat others how you want to be treated. So, if you were a first-time home buyer, never gone through the process, you might want to know what 3 versus 5% down looks like. If your credit's not there, you're going to want to know, hey, how long is it going to take me to get there? Is this something that I can fix in the next 30 days? Or is it going to be a longer process that we should work with my credit guy on? So that's huge. That's why we are very focused on always providing options, always going through the same process, and always, again, going above and beyond and providing information to the client and being the advisor. Same thing at each step of the process, you can ask for referrals. So even if you have a client that didn't qualify, you can say, hey, do you have anyone else that you would think benefit from this process? And lots of times we call it an analysis. So refinance analysis. Hey, here, we took a look at your numbers. It makes sense. Here's your different options. Let's review them. It's a really easy sell of saying, hey, do you know anyone else that can benefit from this analysis? Yes. And that's where I'm going to get into it, but it's kind of cliche, but saying we're selling without really selling. Like, yes, we're in sales, but I consider myself more of an educator or an advisor versus a true salesperson. And we talk about this with my team, and it's really more the upfront, processing, all that kind of stuff. It's very important to have that educational aspect of, hey, here's why we need this bank statement, or here's why we need to source this deposit, or here's why you can't deposit cash. I think that helps from a customer service standpoint, but really upfront reviewing the options is when you're truly the advisor. So selling without selling, that's all we do. Like, and same thing, if you're managing a team or you're hiring your first loan officer assistant and you have this process in place, you can guarantee, hey, this is what's going to happen every time. And you can also manage your team. This is what should happen every time. These are the options we're going to review every time. So it just creates efficiencies throughout the process. And that way, if you do it right up front and you set up all your options up front, then you're really not selling. You're just explaining the different options and then advising which way a client should go, or talking about their short and long-term goals. And when you're talking about their goals personally, they're more likely to stick with you. If you provide them 3 options, I don't know, I learned it in a coaching thing years ago when I was in retail, but when you provide multiple options, they're more likely to choose from one of your options versus choose mortgage company A versus mortgage company B. If we're Modern Home Lending and we're going up against another company, if I just quoted one rate and someone else quoted them a lower rate, even if it had more fees, they might go there. Versus if we provided them with all options, they're more likely to be like, okay, 1, Evan and Modern Home Lending knows what they're doing, and 2, we have all these options. Let's choose from one of theirs. So again, we're basically here to explore options and sell without selling. So as far as like how to start implementing all of this, I would definitely recommend sitting down with your team or your processor, your loan officer assistant, or whoever's reviewing options up front, and basically saying, hey, what are we going to do when it comes to a purchase client? What are we going to do to review their options? What do we want to talk about? Who do we want to send it to? Are we going to use Arrive? Are we going to review 2 options, 3 options, etc.? Because it can be overwhelming. Same thing on refinances. Are you just going to review one rate option, or are you going to show them multiple rate options? Because again, even if the client's going to go with the 0 fee option, it's still beneficial and it's still trust building that you went through all the options with them and went above and beyond. And I can't tell you how many clients are like, I want the lowest rate, I'm okay rolling fees in, and then we review it and they're like, okay, yeah, that doesn't really make sense. So setting up the process of saying, yes, we're going to review 3 options and arrive, or we're going to put together a spreadsheet of 3 options at every point of the process. Or once someone doesn't qualify, we are going to run the credit simulator. Or we're not going to run the credit simulator. If they're not above a 580, we're just going to refer them to my credit guy. But at least you're giving them an option and you're not just saying, sorry, no, see you later, come back when you qualify. This is all important, and this is all a great tactic to help you grow your business, because it gives you a clear mission, and it also sets up a clear process of what you need to do, what your team needs to do, what your realtors can expect from you, financial advisors, whoever, and also what your clients can expect from you. And it really does set you apart, because I don't know statistics, but anytime I talk to someone that's already been pre-qualified with another broker, I get a little competitive and I get excited because I know what we're about to send them is going to be more information than they got before. And just having that up front, even apples to apples, if we're the same fees, same rates, etc., I hope to earn their trust that way by actually going through and reviewing all the options. Educate, educate, educate would be my biggest thing. So if anyone is looking to become a true advisor, I would definitely recommend subscribing to MBS Highway. Listening to Barry Habib, because he talks about this stuff all the time. I would definitely recommend looking into Arrive, looking at, hey, the different ways you can review loan options and rate options with clients there. These are all tactical things that you can put in your business tomorrow. And I would say start with one thing. So rates are low, and you can start with refinances. Purchases obviously is the sustainable long term, but purchases, I think it's very important for someone to know, what does my payment look like at 300 versus 400? Most loan officers, you give them a call, they'll give you a ballpark and say, yeah, for every 10,000, it's $50 or $60 a monthly payment, which is true, but actually putting it into an email and explaining what that looks like just goes above and beyond for clients. So again, thanks for coming to Broker Playbook today. Evan Einhorn out in Arizona. I hope that you guys become true advisors and show your clients you care, because I know you guys do, and I hope it takes your business to the next level.